Welcome back to Investing Talk Podcast. Today, we're going to be talking about Intrusion, ticker symbol INTZ. This is a company in the cybersecurity space that has been making headlines, but for kind of both good and bad reasons. On December 27th, 2024, their stock surged an incredible 351%.
Wow.
But the thing is, when you zoom out a little bit, it's also down over 92% in the past year.
Yeah.
So what gives?
Right. It's a story of potential, butting up against uncertainty and wrapped up in a market that loves a good mystery.
Yeah.
That recent spike, a lot of people talking about Intrusion pivoting hard into cybersecurity. And cybersecurity, of course, everybody knows it's booming right now.
Yeah, it's almost impossible to ignore all the security breaches happening constantly.
Yeah.
Globally,
Really,
feeling safe online.
Yeah.
Top of mind for everyone these days.
For sure. And Intrusion seems to be betting big on AI to tackle this.
Okay, hold on. AI that can see cyber attacks before they happen. That sounds like something straight out of a sci-fi movie. How does that even work?
Well, think of it like this. Intrusion's AI is acting like a super-powered security guard that's constantly monitoring your systems.
Okay.
It analyzes massive amounts of data, looking for patterns and anomalies that could signal an impending attack.
So, give me an example of what that might look like.
Sure. So it could be anything from unusual login attempts to suspicious file downloads.
Okay.
And the key here is that the AI learns from each threat it encounters, so it's becoming smarter and more efficient over time.
So it's not just reacting, it's actually learning and evolving.
That's exactly it.
Okay. That's a game changer, especially when you consider how fast cyber threats themselves are evolving.
Right.
But let's be real, their financials haven't exactly been stellar, have they?
That's true. Their latest earnings report projected a loss of 0.42 cents per share. However, and this is important, that's actually an 85% improvement compared to last year. Plus, they're showing some operational strength with a gross profit of $1.16 million.
Okay, so there are glimmers of hope, but they're not out of the woods yet.
All right.
Now, I've seen analysts throwing around some pretty wild price targets for INTZ. I mean, some are saying it could go to $11.
Right, which would be a gain of over 1,200% from where it is now.
Yeah.
And that's the kind of prediction that sends investors scrambling. But we have to be realistic. Those are just projections.
Right.
And as anyone who's spent time in the market knows, anything can happen.
Yeah, that's why we're here.
Right.
To help our listeners make sense of all this. So we've got a company in a hot sector throwing AI into the mix, with analysts either scratching their heads or predicting it's about as good as the money.
Exactly.
Yeah,
it's wild. Before you rush to buy or sell, we need to dig deeper.
Okay.
We need to understand what's driving this wild volatility.
All right, so let's break it down, starting with a recent stock performance. I mean, swinging between $1.25 and $2.35 in a single day.
Yeah.
That's enough to give anyone whiplash.
Right. So part of that is what we call technical trading patterns. Traders are jumping in and out, trying to ride the waves of those short-term price movements,
Okay.
which only makes the stock more volatile.
So it's not just about the company's fundamentals. It's also about how people are reacting to the price, almost like a self-fulfilling prophecy.
You got it.
Wow.
But let's zoom out and look at the bigger picture. The overall market hasn't exactly been a calm sea lately.
Yeah.
Mixed economic signals and company earnings are making investors a bit jittery.
Yeah, even with the Nasdaq doing well this year. Those rising bond yields and interest rates are making some people nervous.
Sure.
It's like everyone's waiting for the other shoe to drop.
Exactly. And that nervousness spills over into stocks like INTZ. Investors are being extra cautious, which can lead to those dramatic price swings we've seen.
So it's a mix of internal factors like their financials and this AI gamble, and external pressures from the overall market mood.
Yeah.
It's like trying to solve a puzzle where the pieces keep changing shape. Speaking of changing, their revenue's been bouncing around quite a bit too, right?
Yeah, it's been a bumpy ride. In 2023, they brought in about $5.61 million, which is actually down from $7.53 million in 2022.
Okay, so that's a pretty significant drop. I can see why some investors might be hitting the panic button.
Sure.
Right.
Before you do, remember, their revenue peaked at $13.64 million back in 2019, so they've done it before. And they could potentially do it again.
That's a good point. It's not like they're incapable of generating revenue. And they are projecting growth in the future, right?
That's what their latest projections show, which is a positive sign,
Okay,
but it's also worth noting that their strategic shift towards higher margin cybersecurity products could be a major factor here.
Explain that to me. Why are high margin products so important?
Simply put, higher margins mean more profit on each sale. And if Intrusion
can successfully capitalize
on the cybersecurity boom, which seems to be their game plan, that revenue could skyrocket.
So there's definitely potential for growth, but it's not a sure thing.
It all comes down to execution.
Yeah.
You got it.
Okay.
And to make things even more interesting, we need to factor in that Intrusion falls into the penny stock category.
Penny stocks.
Yeah.
So we're talking high-risk, high-reward territory here.
With a market cap hovering around $3.63 million and a stock price around $2.21, it definitely fits the bill.
Okay, so we got this cybersecurity company with a volatile stock, an ambitious AI strategy, and now we're throwing in the penny stock factor. It sounds like a recipe for either a massive win or a complete disaster.
And that's what we're going to unpack in the next part of our analysis.
Oh, boy.
We'll dive into the world of penny stocks and what it means for Intrusion's future.
Stay with us, folks, because this is where things get really interesting.
So we've established that Intrusion is officially playing in the penny stock arena, but what does that actually mean for someone thinking about investing?
Yeah, I'll admit, the world of penny stocks always felt a bit like the Wild West to me. Lots of potential for big wins, but also a lot of risks.
That's a great analogy. Penny stocks are generally defined as those trading below $5 per share, often with a smaller market capitalization.
Okay.
That means the total value of all their outstanding shares is relatively low.
Got it.
Now, this can be alluring for some investors because even a small jump in price can translate to massive percentage gains.
So the potential for those eye-popping returns is definitely a draw, but I've also heard horror stories about penny stocks being incredibly risky.
And the stories aren't just campfire tales. The same characteristics that make penny stocks attractive can also make them incredibly volatile and unpredictable.
Okay.
They tend to be less liquid than those big blue-chip companies, meaning it can be harder to buy or sell large amounts of shares without causing a ripple in the price.
And I imagine there's more opportunity for shady dealings, right? Things like those pump-and-dump schemes you mentioned earlier.
Unfortunately, you're right. Penny stocks can be prime targets for those kinds of manipulations.
Yeah.
Remember those pump-and-dump schemes we talked about earlier? They are a real risk. With penny stocks, imagine someone artificially inflating a balloon and then letting it go right when you grab it.
Oh.
You're left with nothing.
Right.
So always do your homework before investing.
So it's not just about hoping for the best. It's about doing your due diligence, understanding the company's financials, and being prepared for the roller coaster ride that comes with penny stocks.
Exactly. And that brings us to Intrusion, knowing they're considered a penny stock. How does that change our perception of their current situation and potential for the future?
Well, on one hand, that low stock price and smaller market cap could be a sign that the market is undervaluing them, especially with all this potential they have in cybersecurity.
You're on the right track. If they nail their strategy and their revenue starts climbing, that stock price could theoretically go through the roof.
But the flip side is that being a penny stock means they might face more hurdles.
Right.
Maybe it's harder for them to get the funding they need, attract top talent, or compete with those giant cybersecurity companies that already have a foothold.
All valid concerns. It's this constant tug of war between potential and risk. And with penny stocks like Intrusion, the rope feels a bit tighter, which brings us to the million-dollar question. Is Intrusion actually a good deal right now?
Yeah, are they overvalued or undervalued?
We might not have a crystal ball, but there are some metrics we can use to get a clearer picture.
Okay.
One is their price-to-sales ratio, which is currently sitting at 0.7x.
Okay.
You might be wondering what a PS ratio of 0.7x actually means.
I am, yeah.
Basically, it's a way to compare a company's market value to its revenue.
Okay.
In Intrusion's case, this low ratio could mean the market is undervaluing their future potential, especially considering their push into the rapidly growing cybersecurity market.
Okay, so that hints at them being a potential bargain compared to others in the cybersecurity space. But don't we also need to look at their earnings?
Absolutely. And that's where things get a little murky. While they're projecting revenue growth, their earnings per share are still in the red, currently around negative 2.82.
Their lack of profitability is concerning. But how long can a company burn cash before it becomes a serious problem?
That's the big question, and there's no easy answer. Every situation is different, and it depends on a multitude of factors.
Sure.
In Intrusion's case, they're heavily investing in R&D, particularly in their AI-driven solutions. This can lead to short-term losses, but potentially massive gains down the line if those bets pay off.
So it's a gamble, but a calculated one, perhaps.
Yep.
And we can't forget about those intrinsic value estimates that suggest they could be significantly undervalued based on future cash flow.
Right. Some analysts believe they have the potential to generate substantial cash flow in the future, justifying a much higher valuation. But remember, these are just estimates.
So we're looking at a low PS ratio that whispers undervalued, but those negative earnings are screaming caution. And then you have these intrinsic value estimates that paint a rosy picture, but rely on those future projections panning out.
Right.
It's enough to make your head spin.
That's the stock market for you. It's rarely a straightforward answer.
Right.
And we also need to consider those market whispers about Intrusion potentially partnering up with some big names in tech.
Yeah, the rumor mill has been churning on that one. I've heard everything from whispers about cloud computing giants to cybersecurity veterans. What do you make of it all?
Well, partnerships are common in the tech world. It's a way for companies to leverage each other's strengths.
Right.
For Intrusion, teaming up with a bigger player could be a game changer.
It would give them access to more resources, a wider customer base, and instant credibility.
For sure.
But we also need to be realistic, right? Rumors are just rumors until there's an official announcement.
Exactly. It's important not to get swept up in the hype. However, the fact that these rumors are circulating at all suggests Intrusion is attracting attention, and not just from retail investors.
So maybe there's some fire behind all that smoke. And speaking of attention grabbing, we can't forget about the elephant in the room, that 351% stock surge in a single day.
That kind of move definitely gets people talking. But it also raises a red flag, while some of that jump might be driven by genuine excitement over their AI strategy. There's also a good chance speculation is playing a role.
So some investors might be buying in based on hype rather than a thorough analysis of the company's fundamentals. And when that hype fades, the stock could come crashing down.
Exactly. It's a classic case of buy the rumor, sell the news, which is why it's crucial to look beyond the headlines and understand the underlying factors driving those price movements.
So we've got this penny stock with a mixed financial picture, an intriguing AI strategy that's generating buzz and rumors of game-changing partnerships.
Right?
All while navigating a market that's more volatile than a roller coaster. It's a lot to process.
It is. And to add another layer of complexity, we can't forget about the overall market sentiment.
Right. The market's been like a ship in a storm lately, with all the worries about inflation, interest rates, and the economy in general.
Yeah.
How does that impact our view of Intrusion?
Well, in a choppy market, investors tend to get a bit more cautious, maybe even a bit skittish.
Sure.
They might shift away from those riskier bets like penny stocks and look for safer harbors.
So even if Intrusion is on the right track with their AI strategy and those potential partnerships, their stock price could still take a hit just because the overall market mood is souring.
Think of it like this. Even the best sailor can't control the wind.
So what's the bottom line here? What should our listeners be thinking about as they evaluate Intrusion?
I think the key is balance. You have to acknowledge the potential upside, but also be realistic about the risks involved. Intrusion is operating in a hot sector with some innovative ideas, and their moves could pay off big time.
But they're also a penny stock with a history of volatility, facing financial challenges, and at the mercy of market swings.
Precisely. It's high risk, high reward, and whether it's right for you depends entirely on your individual risk tolerance and investment goals.
Some people might see Intrusion as a potential gold mine, while others wouldn't touch it with a 10-foot pole, and there's no right or wrong answer.
Exactly. It's about making an informed decision that aligns with your personal circumstances and your understanding of the market.
Okay, we've covered a lot of ground, from the ins and outs of penny stocks to deciphering those valuation metrics, all while considering the broader market forces at play. But let's zoom back in on that AI strategy that has everyone talking.
This is where things get really interesting. Intrusion isn't just slapping the AI label on everything. They're integrating it into the core of their operations and product offerings.
AI and cybersecurity, that's a powerful combination. But how are they actually using it? Give me the specifics.
They're focused on developing AI-powered solutions that can predict and mitigate cyber threats more effectively. Imagine a security system that doesn't just react to an attack, but actually anticipates it. That's what they're aiming for.
It sounds like something out of a sci-fi movie, but in a good way.
It is pretty cutting edge, and the potential applications for AI in cybersecurity are vast. Think about analyzing enormous amounts of data to identify those subtle patterns that might indicate malicious activity or even automating responses to threats in real time.
So it's like having an army of virtual security guards, constantly patrolling your systems, learning and adapting to new threats as they emerge. That's got to be incredibly valuable in a world where cyber attacks are becoming more sophisticated by the day.
You got it. The beauty of AI is that it's not static. It's constantly evolving. It learns from every encounter, becoming smarter and more efficient over time.
So this isn't just a gimmick for Intrusion. It sounds like AI is a fundamental part of their strategy.
Absolutely. And if they pull it off, this could give them a serious competitive edge. They could become a major player in this rapidly growing market.
So their AI strategy isn't just about fancy technology. It's a potential game changer for their business as a whole. It could drive revenue, bring in new customers, and ultimately boost their valuation.
Precisely. And that's why it's so important for investors to understand the role of AI when they're evaluating Intrusion's potential.
Okay, so we've dissected their financials, explored the world of penny stocks, and gotten a glimpse into their AI-powered future. But there's one more piece of this puzzle we need to examine: those rumors about potential partnerships.
The whispers are definitely getting louder, and strategically it makes sense. Intrusion is a relatively small fish in a big pond. Partnering with a larger, more established company would give them access to resources, expertise, and market reach they need to grow.
So it's a win-win. The big companies get access to Intrusion's cutting-edge AI security solutions, and Intrusion gets a boost in credibility resources and a wider audience.
Exactly. And let's be honest, if those rumors turn out to be true, it could catapult Intrusion into a whole new league in the cybersecurity world.
But again, we have to be careful about getting carried away by hype. Rumors are just rumors until there's an official announcement.
Absolutely. However, the fact that these rumors are swirling around at all suggests that Intrusion is attracting attention from some serious players, not just armchair investors.
Right. So we'll have to wait and see how those potential partnerships play out. It's definitely a development worth keeping an eye on.
For sure, it could be a major catalyst for Intrusion's growth and success.
Okay, so we've covered a lot of ground today, from analyzing their recent stock performance and financials to dissecting their AI strategy and exploring those intriguing partnership rumors. But I bet our listeners still have questions. What are some key takeaways they should be considering as they continue to follow Intrusion's journey?
I think the main takeaway is that Intrusion is a company with a lot of potential, but also inherent risks. They're in a booming sector with some exciting tech innovations, but they're also a penny stock, which comes with its own set of challenges.
So it's that classic high-risk, high-reward scenario we've been talking about.
Exactly. Investors need to carefully weigh the potential rewards against the risks before making any decisions. It's crucial to keep a close eye on the company's progress, especially their financial performance, their AI strategy, and any news about those potential partnerships.
So this is a story that's still being written, and it's going to be fascinating to see how it unfolds.
Absolutely. Intrusion is a company to watch, and I'm eager to see what the future holds for them.
Okay, but before we wrap up, let's address the 800-pound gorilla in the room. That 351% stock surge.
Yeah.
That kind of move has to make you wonder if there's some irrational exuberance at play.
You're hitting on a crucial point.
Yeah.
It's tempting to get caught up in the excitement of a massive price jump, but we have to remember that stock prices can be influenced by factors beyond a company's fundamentals.
Like speculation and hype, which can create a bubble that eventually bursts.
Exactly. So while that 351% surge might be tempting, it's important to approach it with caution and not let emotions cloud your judgment.
So back to the main question for our listeners. Is Intrusion a hidden gem or a risky gamble?
Well, if we've learned anything today, it's that there's no easy answer. It depends on your individual risk tolerance, your investment goals, and your assessment of Intrusion's ability to execute their strategy.
It's like that old saying, invest in what you understand. And after our deep dive today, hopefully our listeners have a better understanding of Intrusion, both the potential and the risks involved.
Exactly. Investing is a journey, not a destination. It's about learning, adapting, and making informed decisions.
And speaking of informed decisions, we'd love to hear your thoughts on Intrusion. Do you think it's a company worth watching, or are you steering clear? Let us know in the comments below.
We always appreciate hearing from our listeners and engaging in thoughtful discussions.
And while you're down there, don't forget to subscribe to our channel and hit that notification bell so you don't miss out on any of our future episodes.
We've got plenty more deep dives planned covering a wide range of topics in the world of investing.
So until next time, remember to do your research, make informed decisions, and never invest more than you can afford to lose.
Happy investing!